Morning, everyone. Paul Duncan here with GammaEdge. Today is Monday, February 14th. Let's go ahead and get right into it. Looking at increased bearishness and volatility, I think in general, the news cycle is driving a lot of things. Always start with the market and make sure you review Taylor's market view in GammaEdge Discord under market status. He updates this every day, updated it yesterday, and I also post some things in there too. We split it into three groups: short-term, medium-term, long-term. On the short-term, cumulative tick model is risk off. You should not be opening long positions right now until we get a change in sentiment. It may be too late for a short entry. Cash is a valid position, and what we mean by that is that there's a lot going on in the markets right now. Sitting on the sidelines may not be a bad thing. Medium-term, the terrible breath continues. And in general, the market is rotating over and not doing very well in a medium-term sense. This will impact swing traders and position traders. Longer term, the positive gamma condition models that we're working with and developing are indicating reduced exposure on the long side on the longer time frame. So again, swing traders and position traders are going to be impacted by this, and we're advising you may want to look carefully at getting out over your skis there. The cumulative tick model is still resuming a bearish, continuing and resuming a bearish stance, and if we lose today, we could head down with everything indicated down. The ES overnight, fairly significant change. We lost the minus gamma exposure level, which was up at 4,300, and the minus transition level, which was up at 4,330. They have both shifted down now to 4,000. It is possible that that near puts were closed out and lower puts were increased. It's hard to tell specifically what's happening, but just be aware that the levels have shifted down. This is a real-time indicator that we have that we use with TradeStation. The upper levels are intact. The zeros are intact. They have not shifted, so the balance of the complex is the same, and the 4,600 level on the upside is still intact, so nothing's really being added above that. The VIX and the VVIX elevated, very news sensitive, as you can imagine. And then finally, with respect to the SPX, we are in a net negative gamma regime, expect increased volatility. The estimated range for today is unusually high, so be aware of that. We do take the larger of those, especially if you're playing a 0 DTE and you want to be outside the ranges. The flip remains in the 45.19 area. We do see increased volatility below that level. As I indicated, with cumulative tick, we had risk off. We had a signal on Thursday, and you can see visually very, very clear risk off, about to lose where we have historically transitioned and bounced back up. If we break below this today, clearly we could be into a free fall here this week. We'll just have to see where we go. On the ES side, as I indicated, we did lose the 4,300 and the 4,330 in minus GEX and minus trans, and they have now dropped down to this 4,000 level. That's very significant. The upper levels are intact, but just note that we have lost the lower levels. When we look at the overall levels for today, the range of 4,300 to 4,575 is quite large. Those are the expected move areas for today. Adjust to the open, of course. I do note we have the JPM hedge with the long put sitting out there at 45.10. That will offer area of liquidity and pinning as we start to approach that area. And then all the way to the top, starting to rear its head here on the PM settled are the 49.20s, which are the JPM short calls that are sitting up there at COI. So just be aware of this structure and what that means. The 0 DTE for today is fairly significant. We've got a lot of negative gamma that is in play today. People will, if they build these puts throughout the day, that'll pull price down most likely in dealer response. As they monetize those puts, we could get a push upward. If we do push upward, it's very, very possible that we push upwards towards the square 5 area here, which is where the keeps all the main support levels below us. We'll just have to see how this racks out. I will note here at Circle 1, we are in a net negative expiry today, so expect a little bit of volatility to the downside. We'll just have to see how it plays out. Overall for the week, we have a tremendous amount of negative gamma coming off. It's been building, and with the monthly expiry coming up this week, it could be fairly significant. If we get a drop in vol and these puts become monetized, we could see a push to the upside. We're just going to have to watch that very carefully. Finally, when we look at the SPX net negative gamma condition up here at circle 1, it's a very significant amount. We're deep in the hole right now, so I think that's important. Below us on the mothership, the big instrument here, the $6.1 trillion SPX, we're looking at areas of liquidity here at 4,400 and as well as 4,310 and 4,300, as I indicated earlier. You can see visually where the different sticky points should be as we go up. If we do push upward, we could push upwards towards this blue boxed area, which is a little bit higher than the JPM hedging level, so we should slow down as we approach this blue area up here. Again, I will note the area of the flip is right around that 45.19, 45.20 area, and you'll have to pay attention to that. That's right here in this JPM hedging area, which I think is going to be fairly sticky. So that's it for today. If you have any questions or comments, please reach out to us at GammaEdge.us. That'll point you over to our Discord, where we have 14-day free trials available. No risk to you, all tools turned on, and we've got a great community there. Additionally, you can reach out through our Twitter feed. They're showing GammaEdges with an S at the end. Make it a good week. Be safe. Thanks, everyone.